I won't stop till I hear him say,
Alrighty, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. In today's video breakdown, I'm going to do an in-depth deep dive technical analysis breakdown on how I was able to orchestrate pulling $1,900 from the Forex markets in less than 3 hours, taking a scalp position on GBP/JPY. Breaking it down for you, we're going to be talking about number one, trading in tandem with the higher time frame. Number two, waiting for price action to come to our well-defined area of interest. I'm going to show you all how I was able to gather the area of interest. Number three, waiting for lower time frame confirmations before entering into positions. And then number four, building logical reasons as to why the market could go on our favor alongside of logical take profit areas. Real fast, I'm also going to show you all how in our GBP/JPY private group chat here in the CYPRX community, some of the other CYPRX students were taking the same exact position that I was. Again, the majority of these student screenshots that I'm showing you as of right now, they have been in this trading community for less than 6 to 8 months, showing you all the progress that CYPRX really truly does create when it comes to technically analyzing the markets correctly. You guys can see that multiple students across the board were taking the same exact trade, showing you all in detail. Again, ladies and gentlemen, that here at CYPRX, how we break down the markets. If it's easily digestible for you all, the link to our mentorship program is in the description down below. I know that it's been a while since I've done a technical breakdown. However, it's because I'm in the process of traveling. Today is actually my last day. And just this last Friday, it was the first time in roughly about 2 weeks that I placed a trade on GBP/JPY, and simply utilizing the methodologies that we teach here at CYPRX, applying them to the market, applying them to a well-defined disciplined strategy, I was able to pull almost $2,000 from the market in less than 3 hours. Remember, these markets are a tool in order for you to escape from the system. The system being the normal 9 to 5 person thinks that in order to make more money, you need to work more hours. The markets here, again, whether it's Forex or the crypto markets, were designed by the elites for you to capitalize on the massive amounts of money that fluctuate on a day-to-day basis, to learn and understand that you can actually make more money in less time simply by learning a well-disciplined and well-defined logical strategy and strategical approach to these markets. So let me stop rambling. Let's jump into this video breakdown. Again, if you enjoy deep technical dives like this one, make sure that you smash that thumbs up button. We are going to start on the higher time frame, breaking down for you all what it was that I and some of the other CYPRX students were seeing in the market to trade this specific New York session. Real fast, I'd like to just screen share my position with you all. I entered in the market at roughly around 160,534. Here is my MetaTrader 5 entry, and you guys can also see the profit that I made on this trade was roughly around $1,900, and I will measure it out for you guys just to show you it was in less than 3 hours. All right. So higher time frame, again, here at CYPRX, we are scalpers, we're intraday traders. That means that we'd like to do a top-down analysis starting no higher than the 4-hour time frame. For me personally, I like to start with the hourly time frame, mainly because I'm an intraday scalper. That means I like to just move in tandem with the hourly time frame for scalp positions in the form of buy and sell positions. This is what I was seeing on the hourly time frame. So I teach you guys here on the YouTube channel the market maker pattern, i.e. the market maker pattern is the pattern that the market makers must create in order to drive price in their favor. Why do we know this, or how do we know this is possible? Because we know that banking institutions are profit driven. That means that if they're going to move price action, they need to make a profit before they do so. Okay. So with that being said, you guys can see this was a false move on GBP/JPY. Now I'm going to show you all how we were able to identify that. You guys can see right here, prior to the New York session that we were trading, which was Friday's price action here on the 27th of January, 2023. 3 days prior to that, you guys can see this New York session. We specifically talk about a manipulation window here at CYPRX prior to the New York session open. Well, right here, and again, I'm not going to give you guys those specific times. So right here down at the bottom, you guys can see that manipulative low that we talk about here that needs to get liquidated before the market makers move price in their favor. Coming into the next trading day, you guys can see how the market makers came with volatile price action in the form of a down move, liquidating any over-leveraged early buyers prior to the New York session that existed in this area in the form of over-leveraged positions from people that were guessing this bottom. Okay, the market makers came, they hunted that liquidity. Now, here at CYPRX, how do we identify that this was a false move? Because you guys can see here, let me just explain this for you all. Pay attention to detail because this market maker pattern gets displayed on the lower time frame, which we're going to talk about as well. You guys can see after this down move, we did a couple of things. The market failed to break a psychological level, i.e., the 500 psych level, which to us here at CYPRX is a major psychological level on our trading pair GBP/JPY that we like to pay attention to. After we failed to break a psych level, violating a previous pre-engineered low in the market, where the market makers, again, set up a liquidity trap in the form of early buyers during their manipulation window, the market makers equaled out bullish momentum to the previous bearish momentum. That was signal number one. After that, they failed to create a new low in the market or a swing low in the market, which is bearish order flow, i.e., a low, lower high, lower low formation. And instead, what did we create? We created a higher low, higher high formation that led to a previous market break in structure. So this is clearly showing us that bulls are in control of this market, whether that be temporarily or permanently, whatever the case may be. We were analyzing that bulls were temporarily in control of this market. Now, with that being said, something else that I teach you all to pay attention to here on the CYPRX YouTube is to identify the higher low after the sweep of liquidity. Well, if the sweep of liquidity took place at the psych level 159.500, then that means that the higher low on the hourly time frame, again, remember, we're doing a top-down analysis to give us a potential directional bias as to the direction that we could be trading on the lower time frame, is bullish. We see that that higher low came in at the psych level 160.000. This is the higher low after the sweep of liquidity that took place here, violating a previous low, manipulating sellers, adding orders above highs, grabbing liquidity beneath lows, and shifting market momentum, breaking previous market structure, showing us that bulls are in control. So we were seeing all this prior to this New York session that here at CYPRX, we were looking to place trades at, all right? So now that you guys have our higher time frame analysis, I mentioned to you guys this higher low. Now we're going to go into detail as to how we were able to identify areas of interest, it says right here, waiting for price action to come to our well-defined area of interest, reacting to the market and not impulsively chasing it. How here at CYPRX are we able to do this? Number one, we focus on specific areas of interest. I just told you guys that we like to focus on the higher low if we're looking to take buy scalp positions on the higher time frame. We like to focus on the higher lows that get created after the market starts trending and after the market has grabbed liquidity. All right. Why? Because we know that the market makers are the only people with the amount of money to make this pattern, which is manipulation of a low, a violation of that low to grab liquidity. Remember, banks and institutions are profit driven. They need to make money before they move the market in their favor. They do that here. Then they show us the willingness to continue buy momentum. That leads to a market break in structure, showing us that buyers are predominantly in control of this market. We want to move in tandem with that here at CYPRX. We don't want to move against that trend. We want to move with the higher time frame. I'm sure that you guys have heard that reiterated amongst the Forex and crypto markets multiple times, right? Move with the trend, not against it. Okay. So now that we have this area as our area of interest, we can now go down to the 15-minute and define that even further. All right. So I have that circled for you guys, i.e. this purple circle right here. And I want you guys to pay attention to this same exact pattern just to prove our theory and our methodologies here at CYPRX are valid. What can you all see here? Now we're on the 15-minute time frame. So we went from the hourly to the 15-minute to draft an even further bias as to why the market could go in our favor for a buy scenario. Okay. Pause the video real fast. And I want you guys to attempt to identify what it is that we say here and discuss on the CYPRX YouTube channel, which is a violation of a low, liquidation of that low that was manipulated by the market makers, and then a higher low after the grab of liquidity. If you identified this low right here, again, during this Asia session, you guys can see during the manipulation window, prior to the Asia session and the meat of the session, there is a manipulation window that exists. Again, I can't give you all the specific times that I give to the CYPRX students. That would be unfair. But we see a pre-engineered low in the market, just like we saw on the hourly time frame, which was this low right here, which was violated, which then we saw the market shift momentum, create a higher low, which we're operating at now. That led to a higher high break in all this previous bearish market structure, right? We're seeing that same exact pattern that we saw on the hourly time frame now take place on the 15-minute time frame here in this area, all right? So with that being said, here at CYPRX, what we did is we identified that this was the manipulation move, i.e., we see trendline liquidity start to take place prior to the Asia session, again, falling in line with the manipulation tactics that we teach here at CYPRX. We also know that the banking institutions are profit driven. That means that before they move the market, they need to profit. So here's that pre-engineered low in the form of early buyers. If I was just to pause for a second, okay, I want you all to see truly what it is that we're seeing here. Before the market makers made this move, what do you all think retail traders are seeing in this general vicinity? Give me a second. Let me clear up some of these drawings real fast so nobody gets confused. But if you guys can't pause the screen and see what I'm seeing, then you need to be able to adapt to trading against retail methodologies. Here is a double bottom formation where the majority of retail investors are thinking that from some type of supportive region, institutional traders are going to be taking buy positions. That is not how these institutionalized traders work. They set up traps in the market to sweep retail money out, and then they move the market. So here at CYPRX, we wait for those patterns, we identify them, and then we react to the market. So with that being said, check this out, okay? You guys can see that double bottom formation right here gets liquidated, i.e. the market makers entice sellers, liquidating these over leveraged early buyers in the market prior to the Asia session open, and then they drive price higher. Same pattern that we saw on the hourly time frame, which is a fake out, a sell position from the market makers to sweep liquidity from lows. They then implement buys into the market, equally matching all of this bearish pressure, rejecting a psychological level. Here's the 0-0 psych level that we identified. And then after the sweep of liquidity, what comes next? The higher low after the sweep of liquidity that leads to a market break in structure. You guys can see all of this bearish price action was a manipulation tactic to entice sellers above highs prior to the start of the Asia session. Okay, so now we have liquidity beneath lows and above highs. The market makers create a failure swing low. Okay, so if this was a valid move to the downside or the market was going to continue down, what would need to happen? You need to be able to answer that question. We would need to see a low, lower high, lower low formation. We do not get that. Instead, we get a higher low after a sweep of liquidity that leads to a new impulsive move to the upside that breaks all of this bearish price action. So now we can see not only on the hourly time frame, but on the 15-minute time frame, bulls are temporarily, as of right now, in control of this market, at least above the 160 psychological level, and where they manipulated price before, which is down here at the 159 500 psychological level. So now as retail traders here at CYPRX, we have two significant areas of interest that we can be bullish above. Why? Because the market makers are showing us buyers' interest above these two specific psychological levels where they're manipulating retail traders and then shifting market structure. Okay, so now let's get into advanced tracking methodologies. Again, this is a gem that I teach the CYPRX students. We take from the candlestick bodies down to the wick of the higher low after the grab of liquidity. We highlight that and we extend that over to the right-hand side to give us, number two over here, a well-defined area of interest that we can wait to react to if the market makers seek to buy from a discount. Why? Because we know that banking institutions like to piggyback off of where previous banking institutions bought from in the form of premium or discount. Discount in the form of buys, premium in the form of sells, right? So with that being said, I want you guys to see again some of the positions that the CYPRX traders took. It was exactly from this discounted area. Let me just restart price action here to the open of New York session. All of this price action so far that I've broken down to you all, we would have had and been able to analyze here at CYPRX, which you guys can see from some of the screenshots, not only from my position, but some of the other CYPRX students, we did to the T. Showing you guys time and time again that here at CYPRX, we trade the markets logically against the retail herd. Okay, if you're interested in learning this more in depth and you're tired of being manipulated, buying at tops or selling from lows, again, the link is in the description down below, teaching you all in depth how we approach the markets here at CYPRX, regardless if you're a Forex, crypto, commodity trader, it doesn't matter. Technical analysis, in my personal opinion, works the same across all markets. Okay, so now that we've done the 15-minute analysis, we've done the hourly time frame analysis. You guys have seen how we got our areas of interest. You guys know now why we are bullish above these two psychological levels. With that being said, coming into this New York session, we can see that the sessions prior to the New York session that we're operating in, they set up liquidity traps, meaning that during their manipulation regions, during London and during Asia, we can see areas of liquidity that were set into the market above early sellers or highs in the market in the form of some type of trendline resistance methodology traders. You guys can see here, prior to each and every single session, Asia and London, and then coming into New York, there's most likely some type of retail money trendline traders resting above these highs, okay? Where people that learn some stupid retail methodology to take sells from trend lines or buys from trend lines, it doesn't matter, their positions exist above these highs in the form of over leveraged positions, right? Their stop losses being above these highs. Well, here at CYPRX, we've already gathered a couple of different things. Number one, the hourly time frame is showing buyer's interest. Number two, the 15-minute time frame is showing buyer's interest. Number three, we are going to seek to be buyers above these two psychological levels. And if price comes into this area of discount from where bank and institutions bought from before, driving price to new highs, breaking all of this previous market structure. So now we have logic as to why, if price comes down into this general vicinity in the form of discount, we can be buyers, because this is where bank and institutions were buyers before, going off the ideology that bank and institutions like to buy at a discount from where they previously bought from or where other bank and institutions bought from, right? So now we can scale down to the 1 minute chart or the 5 minute chart. Let's start there. I know that the 1 minute gets a little bit too fractal for breaking down price action on YouTube, okay? So let's go down to the 5 minute chart. I'm going to show you guys how in detail we were able to do number three, waiting for lower time frame confirmation before entering, and number four, building logical reasons as to why the market could go in our favor alongside logical take profit areas. If you all are still here and I'm not moving too fast for you all and what I'm saying makes sense, please listen to me. If you are going to involve yourself in this market, again, this is my personal opinion. This is how I approach the markets and how we here at CYPRX approach the markets. Have a logical reason as to why you're doing something. Don't just read something and buy or sell. Don't just look at something and buy or sell. Have logical reasons as to why the market could go in your favor. It will give you such a greater edge in the market. And that comes in the form of retail money. Remember, these banking institutional elites, or whoever it is that you want to call it, right? The people that you can't see that have more money than you and I that control these markets, they hunt retail money. They hunt people's money that have less money than them, right? So you need to be able to identify that. So coming into this New York session, I'm going to show you guys how we were able to do that, to build logic as to how we were able to enter into this pullback. So when New York session opened, number one, okay, price would have been right here. And when price was right here, you guys can see here that price was operating at a high. How do we know that? How do we identify that? Because prior to the New York session, we can see that London session bought. Where did London session buy from? Well, they bought from a low. We know that banking institutions are not going to buy from a high. They're going to manipulate price, as I've shown you all in previous video breakdowns, back down to a low where previous banking institutions bought from at a minimum, and then buy up price. They're not just going to continuously push price higher. Why? Because they are profit driven. So just like I showed you all the pattern on not only the hourly time frame, the 15-minute time frame, here is that pattern again, proving the methodologies that we're teaching you all now on the 5-minute time frame, where if the banking institutions during New York session are going to profit, what do they need to do? They need to grab liquidity out of the market. Here you guys can see buyers came in during London session before they passed price action over to New York. We see New York early sellers above highs, equal highs right here in the market. We already have that pre-engineered area in the market that we identified from the previous trading day, which was what? That higher low that we identified, creating the same market maker pattern, which is a sweep of liquidity, a rejection of a psychological level, higher low after that sweep of liquidity that leads to a market break in structure, taking price higher. Identifying that, highlighting that from the candlestick body to the close on the 15-minute chart, and extending that all the way over to the right-hand side, you guys can see that during this New York session open, price came straight down into our area of interest. Remember, we are bullish above the major psychological level, 160-200. Why? Because on the 15-minute and the hourly time frame, that is where the market makers previously bought from, right here. And we're bullish above the 160 psychological level. You guys can see that we had a failure swing low below this blue box and below the psychological levels, which gives us an indication that we are correct in the form of our directional bias. The market makers are still seeking to buy above these psych levels. We also violate a low that leads to a what? The same pattern, guys and gals, okay? On the hourly, 15-minute, and now 5-minute time frame has reoccurred. We see a sweep of a low, a manipulation bearish move to the downside, rejection of a psychological level that leads to a what? Break in market structure. This is now a BOS. We sweep liquidity, reject psychological levels, and break previous market structure. Bulls are now showing us that they are in control of this market still, and that the bears or the bearish moves were manipulation moves to take price down into a discount from where banking institutions bought from before. So now to get the higher time frame discount in tandem with the lower time frame discount, I just want to show you all taking our Fibonacci from this higher low after the sweep of liquidity all the way up to the high, low to the high, drawing our Fibonacci on the right way and not this impulsive way that all these freaking retail traders on YouTube try to teach you, okay? You guys can see how price came down into roughly about 80% discount. So there's our higher time frame discount. Now, moving in tandem with the higher time frame and lower time frame together, once price breaks previous market structure, we can then wait for a pullback, taking our Fibonacci from the low to the high that broke market structure, extend that over. And you guys can see that all of our CYPRX entries here came in at anywhere between 70 to 79% discount, with our stop loss below the 15-minute higher low right here that was created in the market. And we sought to take profit once the market violated all of these manipulated sellers, or people selling based off of some type of trend line. Again, what it is that we teach you here at CYPRX is to trade against retail methodologies. You guys can see the triple touch of a trend line comes in right here, one touch during Asia, the second touch during London, and the third touch during New York. This is where the majority of retail money would have existed in the market above highs, right? This is proof to show you all that the banking institutions like to trade against retail methodologies. They manipulate lows in the form of retail buyers prior to the New York session. They liquidate those lows. They move in tandem with the higher time frame, which I've already shown you is temporarily bullish. And now, as to why we got confirmation to scale into this position, we know that banking institutions, if they're going to drive price higher, they need to add multiple positions to their order. They're not just going to take price higher one time. What do I mean by this? The banking institutions, if they're going to take price higher, need to come back and buy at a discount. And that is what creates price action structure in the form of higher highs and higher lows, or bullish order flow in the market. And here at CYPRX, after the market has created this type of pattern, which is a low, a sweep of that low, a break in previous market structure, right? We like to get in on these higher lows that we know, if the market makers are going to take price higher, are going to create to get in with a solid risk to reward ratio, right? Moving in tandem with the market makers. So this is how we were able here at CYPRX, not only myself, but some of the other CYPRX students, to scale into a beautiful risk to reward ratio trade on GBP/JPY. I personally showing you guys right here, taking my little measurement tool from the low where I entered at 160534 as from my MetaTrader 4 entry, taking that to the high where I pulled profit. I was able to make $1,900 in less than 3 hours. This roughly took about 2 hours and 5 minutes from entry to end. So with that being said, if you all enjoyed this video breakdown, this in-depth technical analysis, smash that thumbs up button, subscribe to the YouTube channel, make sure that you go back, take some notes, okay? If you seamlessly get lost when you're looking at price action time and time again, regardless if you're a Forex trader or a crypto trader, take it upon yourself, if what it is that I'm saying to you is easily digestible, to think about the CYPRX mentorship program. We just had another CYPRX student become fully profitable. If you guys didn't see the interview that I did on the CYPRX YouTube channel with Reese, go back and watch that. He is a fully profitable CYPRX trader that joined our program less than a year ago. With that being said, as always, make sure that you all are doing your own personal research. Here at CYPRX, we are simply just trying to provide you value in the form of knowledge and information as to how we approach the markets. As always, be cognizant, be aware, and I will see you all in the next YouTube video breakdown.
I won't stop till I hear him say